Hello, I'm Karthik Chandrasekhar. I'm the CEO of AIC Sangam, and with me today I have Anuradha Bhavnani, who is my director at AIC Sangam, as well as Arjun Chandra, who's the founder and CEO of Erasus Technologies. We're going to spend some time trying to understand the fundamental problem that Arjun was looking to solve when he set up Erasus, and the story behind the company, as well as what the expectations are for Arjun for the future. Erasus is a company incubated by AIC Sangam, and I'm also a small angel investor in the company today. Arjun, could you tell us a bit about Erasus and what the fundamental problem you're looking to solve?
So thanks, Karthik, for the introduction. Erasus is essentially a company which is building a digital infrastructure platform for the clean tech economy. When we say that, we believe that the foundation of any economic transition happens by investments going into the core infrastructure. As we speak, the entire digital economy behind every industry is driven by core infrastructure investment. So in the clean tech economy that we are focusing on, which is primarily the battery storage driven economy, we see a lot of investments now coming into batteries, battery storage, and the peripheral infrastructure which is supporting that, whether it's a charging infrastructure, the rooftop solar infrastructure which is driving these initiatives. What we are doing is basically building a digitalization layer. It's a platform play which connects different elements of this core ecosystem, of the infrastructure ecosystem. We're starting with battery storage, and that's where primarily our focus is on. And then essentially, getting these nodes, these batteries, for example, connected to the cloud through a digital twin concept. And once we basically get the data of these batteries onto the cloud through the digital twin concept, we mimic the performance of the batteries to kind of solve multiple business problems. So that's the core problem that we are trying to solve. The business benefits will be that we are basically delineating the hardware infrastructure from the operations, which means that investors are free to invest into any hardware of their choice. You could actually buy any battery with any cell, with any battery management system of your choice. You're not dependent on the native software being provided by the battery infrastructure provider, battery management provider to drive your operations. It also solves the problem of interoperability. That means, different parts of the ecosystem can buy different infrastructure from different vendors, and they can be made interoperable without any problems. We are also, building different parts of the, digital layer to solve the problems of business applications, performance, management, and it uses a lot of heavy data analytics with artificial intelligence and machine learning to solve these problems. So this is where we are, and this is what we've been doing for the last few years.
Thanks.
So Arjun, Anu here, a quick question actually. What would be great is if you can share with us, what is your plan in terms of outreach on geographies over the next 2 years? And what are the sustainability goals you actually impact?
I would probably also, share my screen and take you through a few slides about our presentation. Would that be okay?
Sure.
Yeah. So, let me just try to first answer answer your first question in terms of geographical spread that we are trying to reach. So we have modeled our platform as an enterprise SaaS play, which means that we will be hosting the infrastructure over the cloud, and then
Arjun, could you put yourself in full screen mode, please?
So sorry, 1 second. Yeah. Is that visible in full screen?
Yeah, maybe you want to start with.
Sure. So we will be essentially hosting this platform as an enterprise SaaS play. And we are looking at taking this through various kinds of go-to-market strategies. One of our go-to-market strategies is to work with battery manufacturers in different geographies. So we have battery pack manufacturers here in India with whom we have started working already. And the same business model will be replicated in multiple core markets. We look at the Middle East, market. EMEA, for example, is what we are looking at as a core market, which is the Europe, Middle East, and Africa market. And of course, the North American market subsequently will be very important. As I mentioned, that from our perspective, it is going to be a digital infra play. So it can be hosted in any location, and we will be able to service customers across the world. So that is one of our core strategies. The other aspect in terms of how we impact sustainability goals. See, one of the core areas that we are looking at is how the market will be looking at climate change and the SDG goals that are very relevant today. And from the core perspective of driving adoption of clean technology, we identified that the usability and issues around the infrastructure often end up creating hurdles. So what we are trying to do is essentially build this digital platform to basically drive rapid adoption of battery storage technologies, primarily in the transportation sector and all aspects of the transportation sector. So our software has basically versions which we are launching for the two-wheeler, three-wheeler segment, which is the lower capacity pack batteries. We have a version which is coming up for the four-wheeler segment, which we call the middle tier, which is the mid capacity packs. And we are also just starting off our pilot for the electric bus battery segment in India, which is the high capacity packs. So we are looking at essentially a global strategy, which is looking at adoption of rapid deployment and adoption of battery storage technology across the entire spectrum of transportation. And from our understanding and our reading, this will lead to better adoption of the battery storage technology and lower cost of adoption of battery storage technology, with lesser problems both on the operation and maintenance side, and also for the consumers who will be the final users of this technology in some way. So we will, I think, be helpful. Our platform will really help in turbocharging the adoption of battery storage across the entire transportation segment.
Can you tell us a bit about where you sit in the decision-making process for any organization, whether it's a government or a corporate, to kind of switch to electric mobility, right? Where or when do you come in that decision-making process, and how do you help?
Sure. I think what we are seeing in a lot of the companies that we are talking to is that the decision to move from fossil fuel-based infrastructure to an electric infrastructure is usually taken at the board level or is being taken at the CXO level. And once it is done, it is left to the operational heads and the technology heads to come and put together a strategy. We usually come in and it's in that second stage, once the board has taken a decision, because our digital platform kind of embeds into the core infrastructure that will be deployed by the corporate or the user. So in many cases, what happens is once the decision to procure battery-based vehicles is done, we step in to kind of provide the platform which will be then used to do a lot of the back-end analysis, operational management. And so I would say it happens, once the decision is taken and before they go live. So in a couple of cases, I can share with you that our partners or clients have actually gone live without a platform like this and have faced huge operational challenges, in terms of understanding battery behavior, understanding operational issues, dealing with failures of the vehicle/battery on the field. And then they have come to us and we have deployed the platform to help them understand the operational challenges and manage them better. So usually we prefer to come in as soon as the decision has been made. to go into an electric-based transportation infrastructure, and then we would prefer to work with the stakeholders to build the back-end digital infrastructure layer and then take it forward from there.
So if I got you right, what you're telling me is that your digital twin basically provides a digital normalization. So you don't need to worry about what hardwares. So you can pick the best hardwares that you want and allow for interoperability, but also provides basically digital visibility across the entire asset base and the utilization. So not just the fact that once you have assets deployed, you have good visibility on whether they are running well, but can be an integral part of the launch preparation process or the adoption process, where you can gradually use data to make better decisions as you kind of
Absolutely. We look at the data coming from the battery infrastructure and the transportation infrastructure in three models. The first model that we call is essentially the basic visualization of the data itself. I'll just take you through one slide. Now, the basic visualization of the data gives us an as-is picture of where the transportation infrastructure is. So if I'm a fleet operator running electric buses, I need to know where my buses are, where my batteries, how my batteries are performing right now, if there are any in situ challenges in the operations of the same, and if I need to take any corrective action. That is what we call the visualization layer, or the level A layer. The level B layer is essentially an analytics model or infrastructure layer that we have put on top of the basic data on our platform. And the analytics helps you to understand problems that may come in the future. So we at any point in time deal with almost 200 plus data points coming from the batteries. And these data points need to make sense in terms of its operational capabilities, models. So there are various complex algorithms that we deploy to understand the potential failure points of the batteries, to understand how the battery is being used in the field. Sometimes there are issues with the operators, the driver. Sometimes there are other challenges. We see challenges in terms of how different parts of the buses are being integrated with each other, how the charging is being done. Some of these things are so basic that it is surprising that even those get wrong in the field. But our job is to kind of look at these potential failures and decode them and help the organization use the assets better. At the end of the day, these are assets which are millions of dollars worth of assets in the market, and they need to be sweated better, they need to be managed better, so that we get the best returns for the investors as well as for the consumers. In terms of the subsequent application, what we're doing is we have built a digital layer which allows us to build business applications on top of the data. Because at the end of the day, from various perspectives, people would like to know what is the cost of running a battery-driven operations versus a petrol or diesel-driven operation. People would like to know what is the cost of charging an infrastructure, charging the battery. What is, how far will the battery go before it needs to be recharged? Can I sweat the battery a little more? Should I recharge at 80% discharge, or can I go for another 10%? Now, these are decisions which are taken using certain applications that we build on top of the platform. And we are making this in a way that our customers and third-party developers can also build applications for their specific use cases in the future. So we believe that the more we open up this platform to use the data for more applications, we will find new use cases, new uses of the data, which will be used by businesses and consumers, and that will drive even more adoption and hopefully then lower the barrier of entry of battery-driven transportation globally. That is how we look at.
Thanks, Arjun. Anu, one last final question for.
Yeah, so Arjun, thanks so far. Just one last question. Looking at the next 10 years ahead, how relevant and futuristic do you think the technology will be over the next decade?
I think I'll take a slightly philosophical view. I think we're just in the beginning of, the adoption of clean technology. I mean, the climate change problem is real. We all know that. And we are just probably in the first 10%, we're just in the first decadal, first 1 year, 2 years of the serious adoption of this entire initiative to combat climate change from a technology perspective. What will happen is a lot of the work, which is fundamental work, which is going into material sciences and in the electronics, in the core technology and infrastructure side of things, will need a supporting digital layer, like it is happening in every other industry, to support the same, to support its rapid utilization, deployment, better decision making. What we are doing is we are looking at first building the digital layer, and then using the digital layer, we are looking at adopting it to battery storage first for transportation. And then we will look at the entire gamut of the climate change technology space and try to see how we can make them work for different aspects of the same. We already are seeing requests coming from battery users for various use cases in the stationary segment, which is primarily where battery storage is being used in industrial applications like telecom towers, and how we can help them understand the performance of the battery and the management of the battery in those use cases. As mentioned, the peripheral uses of this battery storage, whether it's for driving the charging infrastructure in a lot of the transportation use cases, will also require deep understanding of analytics for understanding how the infrastructure works, how the energy profile works, how the energy analytics will work. Our platform will come with various subsequent releases, which will cater to the needs of different users of clean technology infrastructure. And our vision is that if the analogy that I keep using is, if every hardware infrastructure which is being put up for the clean tech economy, whether it's a solar farm, whether it's the charging infrastructure, whether it's battery storage, every one of them will need a digital platform to build a digital twin and drive its adoption. And iRacers should be the partner of choice for the clean tech economy for doing this digitalization drive. And we see that like everything becomes digital first, so will the clean tech economy, and we should be the partner of choice for the digitalization of this core infrastructure, which is coming up for the next 20 odd years.
So thanks, Arjun. I think, I'd like to take that message to everybody around to say partner of choice. So Karthik, over to you.
Thanks, Arjun, and very best of luck to you and Anirudh on your journey forward. And hopefully, what are going to be as important as bits in the entire ecosystem going forward in clean tech. Thank you for your time.
Thank you. Thank you so much. Thanks.
Thanks.
Thank you.
Hi, I'm Karthik Chandrasekhar. I'm the founder and CEO of Sangam Ventures. I have here with me Anuradha Bhavnani, who is my director at the AIC Sangam Innovation Foundation. I also have Nakul Kukar, who is the CEO and founder of Cell Propulsion, one of our investees building on the electric mobility sector, specifically around LCVs and heavy electric vehicle powertrains. Nakul, can you get started with giving us a view on how electric mobility is evolving and what's the fundamental problem that you were looking to solve when you set up Cell Propulsion?
Firstly, thank you, Karthik, for inviting me for this. Hello, everyone. So as you mentioned, we have been working in the domain of electric mobility for a few years now. We started out in year 2017, and essentially we are focused on the design and development of electric commercial vehicles for the Indian markets. And our focus is primarily on the larger format vehicles, so not electric two-wheelers or electric three-wheelers, but instead light commercial vehicles and heavy commercial vehicles. We believe that this commercial vehicle segment is the one which will drive the transition to electric for the four-wheelers in India. We have already seen a lot of uptake in the electric two-wheeler and electric three-wheeler segments. Electric two-wheeler has essentially now captured the imagination of the mainstream masses, and electric three-wheelers are just at the verge of that inflection point. Since the electric car market is going to be very small in India, we believe that the commercial vehicle segment, which is the largest consumer of diesel and one of the largest producer of emissions, would actually drive the transition to electric for the four-wheelers segment.
And how big do you think is the opportunity in terms of impact?
So today in India, 80% of the cargo is moved by commercial vehicles, by road transport, right? So the majority of logistics industry rely on trucks and commercial vehicles to move this cargo. And what it means in general for the country as a whole is that whenever there is a fluctuation in fuel prices, the prices of all the commodities, and in fact, like a nationwide inflation also gets impacted because of that. So at a national level, transition to electric will definitely, help us control these kind of inflation, control this kind of inflation, as well as the sensitivity to the in the price of commodities to fuel also will come down. So this is like a direct impact on every individual's day-to-day life that this transition will have, besides the obvious benefits of reduced emissions and reduced fuel import expenditure for the country. On a more individual or a local level also, we believe that the positive operating costs or a reduced operating costs that we see with electric commercial vehicles, given their high asset utilization, it would be a very interesting proposition for the logistics industry and the carriers to adopt and improve their margins. So even as an industry, the logistics and transportation companies stand to gain and benefit from this transition. So there's a multi-fold impact at different levels that this transition is going to have.
Right. Thanks. Anu?
Right. So thanks, Karthik. That was great. Great introduction, Nakul. From a perspective of conversion or shift to this newer transport, and assuming you had to convert one city into it, what is it that you would need as an organization to convert 50% of public and private LCV in one city for India? What would you need to get to that scale?
So that's a very good question, Anu. I mean, that's exactly how we are also taking approaching this problem of transitioning the road transportation to electric. We are currently based out of Bangalore, and most of our vehicles are being operated here in Bangalore. And we are seeing multiple challenges and problems and apprehensions also that need to be addressed for our customers to start adopting these vehicles at a large scale. So essentially, the truck owners and the fleet operators are very well aware of the benefits of an electric vehicle today. And given the fuel prices where they are today, they have this strong desire also to transition. But there are other multiple stakeholders involved in this transition, and there are other pain points in the ecosystem that need to be addressed. The first most obvious one is the availability of charging infrastructure. Although for commercial vehicles, it's a good thing that they have fixed routes and a fixed distance that they need to travel in a day. So you don't need a citywide infrastructure, but still you need charging stations at strategic locations where the vehicles can be parked and then charged and then, dispatched for cargo movement in the morning. And that's what exactly, we are trying to solve as a problem, where we are trying to integrate or bring together all the relevant stakeholders like the state discoms and power utilities, the solar players, the stationary energy storage manufacturers, and trying to, and even the infrastructure and real estate guys, to identify a location where you can set up a charging station. We have built our first touch point here in Bangalore like that, where you can park these fleets of electric vehicles, you can charge them. So availability of such a touch point actually brings a lot of confidence among customers to start using electric vehicle. Similarly, you have to engage with various government departments, the road transport department, the regional transport office, for getting the electric vehicles registered. You have to deal with traffic police, you have to deal with towing services, because they also don't have much idea of how the vehicle has to be handled in case of an accident, or if the vehicle breaks down in between the road and you have to move it, right? Then where are the service centers or repair centers to manage these vehicles and service them? And besides the charging and the obvious customers were using it. So integrating all of them, getting them on the same page, and building out a ecosystem that touches all of these. And I still haven't talked about the insurance providers and the financiers who come in to finance these vehicles and provide insurance, which are the other set of stakeholders here. And then there you have the dealers who are going to sell these vehicles through their dealerships, right? And they need to also step up to look at electric vehicles. So all of these multiple stakeholders needs to be, addressed and offered some value, so that they start adopting electric, start looking at its benefits. And this is what is required at a city level or a state level to, essentially make this transition happen and reach a 50% kind of a fraction, right? Of course, this scale up will also have problems in the power infrastructure side, but that is more of a gradual shift that can be done, because this increase in the percentage fraction of electric vehicles also will happen over coming years. And you have to do it city by city, state by state, to, and use the learnings from previous cities and employ them in the next cities that you go to. So this is how even we are looking at expanding this and building this out.
Quick follow-up question to that, Nakul. I think what you mentioned, right, this focus on heavy electric vehicles is what attracted us to you, because I think it's kind of the 80-20 rule, right? Like the heavy electric vehicles are the ones who actually, are responsible for most of the carbon emissions, right? In this domain, in the domain that you operate, what makes you unique, and how competitive are you globally? How does this ecosystem look like globally, and where do you sit within that ecosystem?
So regarding the heavy electric vehicle segment, what we fundamentally believe is that if the technology has not been a barrier, the heavy vehicle segment would have been the first to transition to electric. Because the economics of a heavy electric vehicle are the most favorable compared to any other vehicle segment. We saw electric two-wheelers transition first just because of the simplicity of the technology and a low technology barrier, which is not true for heavy vehicles. However, any heavy electric truck or a truck in general drives more than 300 kilometers in one day. So, and given that the more you drive a vehicle, the more you'll have as fuel savings, implies that an electric truck will have the best economics compared to any other vehicle segment. So given this kind of a strong business case, we were definitely, inclined to step into the heavy electric vehicle segment, for which, we also got an opportunity to work with the BMTC, which is Bangalore's state transport unit, to build out an electric bus with them. Of course, in these early days, we are working to solve various technology and engineering challenges involved, and to get these vehicles to a lower cost than what it is at today. And essentially, once some of these challenges are solved, electric heavy vehicles would essentially transition to, the heavy vehicle industry will transition to electric much faster than any other industry because of such a strong business economics.
Brilliant. So basically build out the technical capability that's not that easy, but for a very highly lucrative and big market.
Exactly.
It means the impact potential is also very huge.
Yes. So as of now, the technology development and the energy and the engineering complexity is a very strong barrier to entry for this segment. So since we are working on this for a few years now, and even got an opportunity to put out an electric bus in partnership with BMTC, we believe we are in a good position to actually create a impact in this segment and be at the forefront of this transition for this particular heavy electric vehicle segment.
Thanks, Nakul.
So quick question, Nakul, which is around the policy environment currently. What is that one ask, Nakul, you would ask the policy environment of the country to enable for you to make this happen, if there is any blocker there? And the second bit is really around the financial segment. So if there is anybody in the banking segment listening to you, or somebody who's ready to cut a check for you, what would you tell them you would need in terms of creating the next big business for you in the short term? I'm talking of the next 2 years. I'm not talking beyond that.
Sure.
So one is the policy environment, and two is the funding aspect.
Yeah. So for the policy front, we believe that one of the biggest interventions that are needed today is the announcement of subsidies for the electric commercial vehicle segment. Today, under FAME 2, the subsidies and incentives are available only for electric two-wheeler, electric three-wheeler, electric cars, and electric buses. And this is one reason, because of which there are not many players entering into this segment right now, and even the established players haven't launched a electric commercial vehicle product. However, we believe that announcement of subsidies for this segment is going to happen in the next 1 or 2 years, and that essentially would be I think the inflection point to get this segment also going and becoming really seeing a major transition to electric. Coming to the financing side, what we have observed working in this segment is that due to the complicated nature of this business, there are many challenges that can be addressed by capital, and then there are some challenges that are just having more capital will not help with. For example, what we are seeing today with supply chain disruptions and semiconductor shortage is something that having a lot of capital will not help with. Everyone is stuck with that and can't do much. But inventory management and supply chain management in general are the areas which definitely fund infusion can help with. So this business fundamentally is of scale. Today, we are at a stage where we are building out 10 vehicles per month, right, in a consistent manner, and that is good to get into the market as a company which is doing some initial work with the customers, getting those initial customers, building out a relationship with them. However, the real growth and the real impact would be seen when we start delivering hundreds and thousands of these vehicles to our customers, and that is where a financer or a capital infusion can step in to help us kind of get to that scale where we are solving the problems on the supply chain and inventory side, and have sufficient components and parts to put together these vehicles and start putting them out.
That's a great one, Nakul. Thanks for that. I think important points to note, Karthik, as we work closely with Nakul to take some of this forward.
Sorry. Thank you, Nakul, and the very best of luck to you and the entire Cell Propulsion team for the future.
Sure. Thank you, Karthik.
Thanks, Anu. Thanks, Nakul.
Thanks. Yeah.
Thank you, Anu.
Thank you.
Hello, everyone. I'm Karthik Chandrasekhar. I'm the founder and CEO of Sangam Ventures. I got with me Anuradha Bhavnani, director of the AIC Sangam Innovation Foundation. I also have Vishal Mittal, founder and CEO of Delectric Systems. Delectric was part of our one of our early acceleration programs at the AIC Sangam Foundation, as well as now part of the Sangam Ventures portfolio, where we did a very small early investment into Vishal's journey. Welcome, Vishal, and maybe to get us started, could you give us a bit of background on how you got started with Delectric and what's your vision for the future for the company?
Sure. Thanks, Karthik, for having me here. I started Delectric almost 5 years back now in 2016. So prior to that, just give a bit context in terms of what I was doing and how do we start to how the genesis of Delectric. So my background is in chemical engineering with specialization in electrochemical engineering. So I'd been doing electrochemical systems such as fuel cells, hydrogen, batteries for a good 15 years before I started Delectric. And these were in various domains, like right from fundamental research, something which was at TRL 1, 2, 3 level during my PhD days, to something which was more advanced, and then also something which were something which was very close to the market. The last company I also used to work with was also a classic Silicon Valley based startup. So that was kind of the thing, is the first realization was that I could do it. I mean, I saw an opportunity to not just build a technology, I won't say right from the scratch, but completely re-engine a product, build the technology, and take it to the market. The next bigger question was, okay, I could do it, but I mean, is it something which is worth doing it? And I think that was equally important, that here it was an opportunity to build something which was really cutting edge in terms of clean technologies, batteries, and more importantly, the kind of impact it could have both from a social perspective and just from a business angle as well. And that's how it came about starting this company. How was something which was, how do you go about building this is something which kind of I figured out later on. But I think the most important thing was just the first realization is this could be done, and this is big enough to do.
So when we invested, our main reason for supporting Delectric was this need for long duration battery storage, especially in very harsh conditions, which we find in India, especially in the off-grid and remote markets, right? Can you give a bit of background on the technology behind Delectric and what your roadmap for the future looks like?
Sure. So the specific technology that is the core focus is on vanadium redox flow battery technology. So as Karthik said, amongst storage systems also, there are a host of technologies out there. So this falls under so-called as a long duration storage. That is, if you need to store energy on a daily basis for 3 hours, 4 hours, 6 hours, or 8 hours, then that's where it's suitable. We have been using batteries for a good 50 years in consumer electronics and UPS, but those are more as a backup batteries, that in case there is a power failure, you kind of use those batteries. But the long duration storage is something which is actively used on a daily basis, and it complements renewables. So as we know, both solar and wind are intermittent. They work only for a few hours a day. So if you're going to transition to a really green, clean technology, then what do you do for the rest of the duration? So that's where our technology comes in. That's where our products come in. So even though initially the niche markets could be those remote areas where there's no electricity, But I think in the last few years, what we've seen is now this is the mainstream market. So essentially the idea is to use renewables plus storage, and it could be cheaper than your conventional grid. So essentially reach a grid parity with your renewables and storage. So that becomes your primary source of energy. And the secondary source could be your conventional grid or anything else that you would want to use.
Anu, any questions from you?
Yeah, thanks, Vishal. I think, like you said, you are clearly working on creating an ecosystem, which is going to work not just for a particular kind of geography, but at a much wider level. So from a plans perspective, which are the other geographies that you're looking at beyond India for now?
In fact, I would say most of our traction and the deployment is outside India than India, which is the case for many of these new technologies. So we already supplying systems to Australia, in Europe, and very close to closing a megawatt-hour scale system in North America now. And the same is case for Africa. So in that case, we are already present in pretty much worldwide. Our model is we are tying up with different partners in these regions because organically to grow and penetrate in the worldwide market takes time. So essentially our strategy is to identify partners, whether they are in terms of supplying key materials for our battery, or they could get market access, or they are already regional companies who are present in their respective markets. So in a sense, we are already present in a lot of markets outside India, even right now. And
you have a presence in India as well. I know you
have quite of course. Yeah. Yeah, of course, India, I mean, for a smaller company, that's always the challenge. I mean, the market opportunity is huge. This is going to be one of the largest market when it comes to storage. But, just in terms of when you get started, it's not the easiest market to get into. Even though your price could be competitive, but I think there's always a hesitancy in terms of the first mover.
Right. So just one question before I pass you back, Karthik. Given that you are already in the green, clean space, how do you measure your impact? How do you measure and report your impact currently?
Frankly, to answer that, I have not looked into much detail. I mean, fundamentally, the way we went about developing the product and technology, it's the premise is it's the charging source is either solar or wind renewables, and then you essentially store that energy into the battery. So essentially, it's going from an intermittent renewable to 24/7 clean electricity. In terms of how do you actually convert that into CO2 savings or impact, it's not, frankly, I have not done much work on that part. And also has to do with we were targeting mainly commercial industrial customer, utility scale customers, not going into that impact space per se, even though the application of these batteries is in remote areas, microgrids, but that's not the market we were targeting. So we haven't done much work in terms of specifically quantifying. But to answer that, yeah, I mean, the impact is going to be huge.
Right, and you're clearly addressing the sustainability issues with a long-term view, and you're a part of the various organizations and technologies that will help the planet.
Exactly.
Reduce its impact in a big way. So,
yeah. And in some cases,
you're right.
we may not directly measure it, but definitely like our customers, we have a couple of large companies in Europe. Sustainability is something which is very high on their mandate. These were conventional brick and mortar companies who are now transitioning into the so-called clean tech. So sustainability is very high on their agenda. And the reason they would adopt a product or technology like ours is exactly the reason, as you said.
Fantastic. Thank you, Vishal.
Vishal,
over to you, Karthik.
Yeah, and just in terms of looking at the global battery landscape and where you sit in India, what makes you confident of the electric's success and the scale you will be able to achieve?
So I think definitely there are obviously always positives, negative, depending upon which regions you operate at. But I think at least in the last couple of years, we've crossed a few hurdles in the sense, overseas companies, large groups in Australia, European countries adopting an Indian technology, and that was always a first barrier. And in some cases, they had to kind of white label the goods to actually sell into that market. But I think, that took us some time, but having crossed that, we see a significant advantage in terms of leveraging, in terms of providing a very cost-effective, reliable, and high-performing technology compared to a lot of competitors out there. And many of these obviously are overseas companies.
Right. So best in price and performance.
Performance reliability comes first. And on top of that, if you can be very, very competitive, then nothing like it.
Right. Thank you. And I'm assuming as you build the business forward, your goal is to actually make yourself available across the markets, across even the off-grid markets, across other markets, and be more of just a battery supplier, right? Like where there's an ecosystem that basically can help you manage these batteries at large scale.
Certainly, yes. There are already a couple of projects which are, in very remote regions. You must be aware of one of the systems we did in Sikkim, which is an off-grid site for our Army project. So we are definitely into the space where we are ready to supply these batteries to, to these different applications. But at the same time, from a vision perspective, D-Electric actually stands for decentralized electric systems or networks. So our overall vision is going to be the company who actually supplies the end-to-end solution. So essentially a complete decentralized electricity solution. But at the same time, we are working with some partners where we are just the battery supplier and the end integration is done by them. But from a much larger vision, obviously we think we would going to be the company who would actually supply this overall system or overall solution to the end customers.
Great. And any parting thoughts on your plans for the future, and any kind of wish list from policymakers, government, other organizations?
So in terms of current plan, where we are is we are in the process of scaling up. We've already done commercial pilots. We have started getting repeat orders from the customer, proving that the product is validated. So now it's a next step of scaling up in terms of just the size and the product. So I think from a wish list perspective, I'm just speak in terms of the India perspective because I think that's what you're referring to. I think the market potential, as we know, is pretty huge. We already saw that in solar. We are seeing now that in the case for batteries, hydrogen. But I think in many cases we are not the first mover. There are already 50 odd gigafactories out there, and now we're jumping on that. So I think in many cases, if we take that first initiative, then I think we just not in terms of being the largest market, but in terms of the place where you could actually develop technologies and supply it overseas. So not just an adopter of technology, but also a provider of technology. So I think that's something which we still kind of lag behind. Hydrogen mission is a classic example. It's been going on for 25, 30 years in terms of countries developing technology. So it's just now we are talking about this massive opportunity in India. But we miss out on a significant opportunity where we can actually develop these technologies and deploy it in regions outside India.
True.
And so I think it's not just the government. I think that falls on the corporates as well in terms of trying to be the early mover and adopting some of these products and technologies.
Thank you for being the champion of that. And pleasure talking to you, and the very best of luck to you and to the electric systems, Vishal.
All right. Thanks a lot. Yeah.
Best wishes, Vishal.
All right. Thank you.
Hello, everyone. I'm Karthik Chandrasekhar, founder and CEO of Sangam Ventures. With me today is Anuradha Bhavnani, my director at the AIC Sangam Innovation Foundation. And I got the founders of Equity Address to join us today, Puneet, Mohit, Abhishek, and Ashish. Puneet, maybe I'll start with you. Can you tell us a bit of the story behind Equity Address and how you got started?
So yes, do you want me to start with the presentation?
Sure.
So good morning, everyone. I am Puneet Gupta, representing Equity Address, along with my co-founders Abhishek, Ashish, and Mohit. we would like to present Equity Address, which is an investment platform for co-ownership of luxury vacation homes. Now we would like to highlight the problem which our platform Equity Address is solving. Point number one, we would like to emphasize on the problem faced by a luxury traveler who has been visiting multiple global locations during his lifespan. You would be amazed to know that 65% of the total expense of their trip goes in the accommodation. Point number two, those who aspire to own second home. Owning a second home comes with a high ticket value and with multiple hazels in management. Also, the second home is purchased with a sentiment, not with the research. Now coming to the solution, at Equity Address, we invest in luxury vacational homes, which are well researched and have high potential growth. At a fraction of cost, investor gets rent-free vacation for a certain number of days at our properties across the globe and also entitled to great rentals and capital appreciation. After investing, we also provide investor personalized investment dashboard along with the private travel app. Now I'd like to take you to the market opportunity which Equity Address is catering to. So the global market says something around $1,200 billion of vacation home market in the terms of they have around 1 lakh vacation homes, which is growing at a CAGR of around 3.2%. Our serviceable market is around $80 billion, which is again growing at a CAGR of 3.2%. Our year one plan is to acquire 30 homes, which is worth 60 million on an average price of $1 million to $2 million. The rental we have catered to around 5 to 6%. And again, we have mapped rentals according to the acquisition. And then when we talk about the HNIs, there are way more number of HNIs available in the global. And for first year transactions, we're only looking at 300 HNIs globally. Now I'd like Mohit to take you through the platforms.
Hi everyone. So Equity Address is not just for example, financial platform. We have along with it a Venya. So we are coming up with an all-in-one platform where Equity Address is a financial platform which will help us the travelers track their investments. Venya, on the other hand, would be giving the world-class experiences, global experience, whether it comes to stays, cuisines, or activities. So here we are trying to say that we are bringing in all-in-one platform where Equity Address and Venya will merge and become a luxury asset ecosystem. So here are the platform snapshots. So these are the 4 platforms which we have created. One is the dashboard. So the dashboard basically gives the investor a transparent fund seeking. It gives a one-stop dashboard to understand that where he's investing, what property is investing, and there's going to be an annual audit of revival audit happening by the leading firms. Then we have a private app for every investor. So every investor is going to be personalized marketing happening. So every investor can choose their personal things and we can give them customized solutions. Then third, it comes to the Venya Hospitality and Experience app. So whosoever is not investing in the Equity Address can go to the Venya platform. It's an algorithm-driven recommendation engine. So where we can give world-class experiences. And then there is a Equity Address card, which is going to be a seamless card, which is going to be tied up with all the third-party alliances, which we're going to cut across, which is going to give a value add to the consumers across all the properties, all the avenues we're going to cut across through the globe. Now I would like Ashish, my colleague Ashish, to present Abhishek to take.
Thanks, Mohit. Good morning, everyone. So let me take you through our vision for our next 5 years. So we would be launching with our multiple fund strategy, and that would be like for the participation of retail investors. After the successful launch of our first fund, we would be going into the aggregator of luxury vacation homes because that will give us a positioning in the market with the backing of 30 luxury homes. And then we would be going ahead with the hospitality and experience wherein the tech platform, the algorithmic data will be used to it, and we would be positioned itself that where we have to take on lease certain vacation homes in a particular country. Now, this is our business model wherein Equity Address will be launching an alternate investment fund in GIFT City to start with the first one, which will have a lock-in period of 5 to 7 years with a minimum participation or the ticket size of 135,000 USD. And that will be done through the LRS mode. Parallelly, there will be a SPV which will be created under that Equity Address. And this SPV will be taking care of the acquisition of 30 properties across the globe. Once the mobilization of money is being done through the fund will take over the SPV by deploying that money. What the retail investor will be getting is free night coupons, 10 in numbers annually. Along with that, yearly rental, which will be paid quarterly to them in a range of 5 to 6%. And then foremost of it is the capital appreciation, wherein the capital gain over and above the principal amount will be delivered to the retail investor in a ratio of 70:30. So, I'm passing it on to Ashish, who takes care of the acquisition.
Good morning, everyone. Now I will introduce the precise locations of the Global Travel Fund 1. For the initial fund, we have identified prime travel destinations with global connectivity spread across 15 nations. We plan to allocate 60% of the fund amongst European countries, as Airbnb data suggests that 37% of their revenue is generated from the same. The acquisition strategy for the EA model will begin with market research followed by pestle analysis, which would guide us in shortlisting particular homes, which will then be evaluated on techno-economical factors. JLL, the global real estate firm, will be partnering with us at each of the aforementioned stages. All these elements combined will be critical in the fundraising leading up to the acquisition of the particular luxury property. Homes will be shortlisted under various parameters. Few of them, which will be rental yields, should be in the range of 5 to 6%. Price bracket of the luxury homes will be ranging from 1 to 2 million USD. The destinations that we will be targeting will be premium travel destinations with consideration of the double tax agreements and low capital gains implications. Our aim is to choose luxury properties which will complement the inherent style of the city. Hence, at different locations, we will be choosing different kinds of property. Our target investors are financially free and are keen on new experiences with added investment advantage. Now I will let Mohit take you further.
This is the sourcing flywheel for the brand. So we, at the core of equity address, we believe that we want to deliver a great experience to everyone who experiences equity address with returns in the mind. So primarily, this flywheel has two purposes. One is business growth, and the other is customer delight. So through advertising, direct traffic, owner referrals, and selling agents, we are going to build an automated system backed by technology, where basically equity address is the growth engine for the luxury vacation homes and great experiences. Over to you, Ashish.
I will now take you through a comparison between luxury hotels, destination clubs, second home ownership, and equity address. Out of all four, as you can see, only EA comes with a high investment potential with low annual expenditures while covering all the amenities provided by a luxury hotel or a destination club. Thus, while we can find some factors in a few, it is very hard to find all the benefits under one umbrella. To summarize the comparison, with a ticket size of $135,000 US, the yields on a second home will be fairly lower as features of the property will be proportional to the investment size than as compared to the model of co-ownership, which significantly enhances the quality of property acquired via the sale, thereby increasing the proportional yield. I will let Abhishek now take you further.
Thanks, Ashish. So this is how equity address will make money. We'll charge 1% management fee of the total value of fund annually. Rental sharing agreement with retail investor in the range of 60:40. 40 is ours. Capital appreciation sharing in a range of 70:30. 70 is for the retail investor. Third party alliances, as Mohit has already explained. So we will be taking commissions on that, and there will be food and beverages revenue. Below that, there is a management revenue for one fund cycle, which we are hoping to complete within a span of 1 year. And when you take a look at the graph, you will see that in the 5th year, once the lock-in period of 5 years gets over, the property gets liquidated, and we will be coming up at $11 million of revenue. Now, this is the revenue projection for the total revenue of what we will be achieving. $70 million we have included by selling the $60 million of fund comprising of 300 retail investors with a CAGR of 213%. We are expecting it to grow to $750 million in 2 years, and the number of units sold will be 1,500 because it will be comprising of the fund value and the aggregation of the homes, which will be on the fractional ownership. This is the ask. So we are looking for a debt to equity in a ratio of 55 billion to 5 million USD. And we are looking for an equity of 8.5 million USD on a valuation of $55 million, wherein $5 million will be used for the leverage of debt and 3.5 million will be used for the OPEX. Now I'll hand over to Puneet to take you further.
So I'll let you know in the terms of where we are standing right now. So we have completed our framework setup. We have done our market research. We have done the global partnership. We have finalized the roadmap. We are in process of applying the licenses. We plan to launch this fund by December 21 and so on and so forth. We'll be launching multiple funds in every 6 months. Then when we talk about why now and what all elements which can help equity address grow, as in HNI, they have been preferring second homes instead of hotels. And in the terms of revenge travel, the travel has been blocked since last 2 years. So the revenge travel gonna happen. And there is no legal and reliable medium available to invest outside in the second homes. Now, I'd like to brief about a team. I am Puneet Gupta, I am CEO. I have 9+ years of experience in product strategy and sales. I have started a couple of startups. Then there's Mohit. He has 13+ years of experience in marketing and strategic alliance. His last assignment was with the Unilever. He was heading marketing for Lakme. Then there's Abhishek Madhukar. He has 13+ years of experience in merger acquisition and credit risk analysis. And his last assignment was with SBI. He had worked there for last 12 years. Then there is Ashish, 10+ years of experience in executing EPC projects in collaboration with the government. Then we talk about the founding team. There's Vedant Aluwalia. He's a 7+ years of experience in technology and product. He's a Stanford University pass out. He's helping us in the platform builder. Then there's Arjun Chandra. He's a 12+ years of experience in advertising for luxury and hospitality and lifestyle brands. He has made and worked with many global 5-star brands like La Meridian, Roseate, Oberoi, and designing a PR and communication for them. Then there is Juhi Raj. She's an acquisition specialist. She's been building beautiful homes across India for multiple clients. And she's been helping us in defining the SOPs for the homes. Then there is Barry Clement. He's based out of London. He's again 25+ years of experience in hospitality. So he's working on the SOP of pre-travel, during travel, and post-travel in the terms of defining the personal concierge. Then there is Sophia. She has an experience of around 18+ years in luxury travel and global alliances. And she's been helping luxury brands and tying up with the HNIs. Then there are board advisors, which is Kanak Pija. So he's already running a unicorn startup in San Francisco, and he's helping us in structuring our framework. And again, Anubhav Nath, he's working with Scotia Bank Canada. He's an Indian Institute of Management pass out, and he's again helping us in structuring our framework. Then there are a few strategic consultants, which is JLA, who's helping us in acquisition, EY in the tax and regulatory. There's legal, is AKS Partners, and banking is HSBC. Thank you.
Brilliant.
So great.
Thank you, Puneet. Thank you, Mohit. Thank you, Abhishek. Thank you, Ashish. I think that's about the time we also had. Any last parting, thoughts from any of you? Puneet, I guess you're the CEO.
So we have been so why the idea came up. I think the question arises this. So we started with our small project in Goa, which we sold on fraction to 5 individuals. Then we started. So we are all pass out from universities from outside. Like I am pass out from UK. Ashish is pass out from UK. Abhishek and Mohit are pass out from Dubai. So we have been traveling to multiple locations. So we have few reach out people there. So we tried to explore the market, how the market is moving. Then we researched on the market. We got to know there is certain kind of companies are doing such kind of model in US, and which I can name it by the name of Picasso. So they have launched their operations in October 2020, and they became the first company which became unicorn in 3 months. They became unicorn in 3 months in January 2021, and they have already sold around 75 homes on fraction. So this gave us the confidence and the idea to explore the market. But our idea is to give the rentals back. So in their platform, they are not promising any kind of rentals. In our platform, we are not charging any kind of extra fee from the retail investors whosoever invest with us. So this is what we are right now building, and we are right now creating a special niche in the segment, in the luxury asset, which is primarily co-ownership. When we compare to Netflix streaming, When we compare to Uber is ride sharing. When we compare to Airbnb is short-term rentals. So we are trying to create a new niche in the market.
Brilliant. Brilliant. The very best of luck to all four of you in your journey ahead. Thank you so much for joining us.
Thank you, guys.
Thank you.
Thank you.
Thank you.